everybody. Welcome to the Calgary Real Estate Show. This is our monthly market recap. We're going to be getting into all the stats here in a second. Jaden is back, fresh off of a run through the ravine, right? You just blasted through that thing.
Yes, in my mind. In my mind.
In your mind.
I think at this age, when I'm running, there's no blasting through anything. It's just like the tortoise and the hare thing, the slow and steady, right?
Exactly.
Yeah, for sure. For sure. Well, we are back from a conference in Florida and a little bit of R&R, so we're excited to get back in it here. So we're going to roll through the stats. Jaden's going to have mortgage news. Natalie has a very fun feature that you're going to want to see, especially the first picture. I did take a peek. Sorry, Natalie.
That's okay. I sort of figured you would.
Exactly. Well, I had to know what the title was. So here's our weekly stats as we're week into November now, and you see that we saw a big decrease in new listings and sales this week, but that still gave us a sale to new listing ratio of 71%. So if you look at the last 3 weeks, we're 71, 72, 76, and then 67, 53. I believe the 53 was around Thanksgiving, if memory serves. Pending's down as well compared to last week, so we'll see where that goes. Days on market up to 34. I have a theory on that, and I think it's because of the oversupply, well, not oversupply, but the drastic increase in supply of apartment condos, because these are gross stats for detached, semi-detached, row townhouse, and apartment condos. And now our actives and pendings as of this week are back under 5,000. So interesting news there. And then when we look at last year, same week, Natalie, take it away.
All right. So last year we had 420 sales. This year, 421. So it's up 0.25%. New listings last year
flat.
Yeah, exactly. New listings though last year 582, this year 668, so it's up 15%. Actives last year were 3270, this year 4938, so it's up 51%. That's a pretty big jump. Pendings last year 597, this year 618, so it's up 4%. But again, correlate that with the amount of active listings. And days on market 29 last year, 34 this year, so it's up 17%.
Yep. So there we go. So we're seeing the big jump. And Jaden, what's going on mortgage rate wise?
Yeah, and honestly, even since last month, I was, you do a bit of when we're doing this one, you do a bit of a month leap to see the big changes in interest rates. And to be honest, there's not a huge change. Really, we've seen that 0.5 point come down that we saw in October from variable rates. But you thought that maybe fixed rates would see a little bit more movement on the downward side. And to be honest, everybody was kind of holding their breath for the US election. And as soon as we got the results in, the bond market on which fixed rates are based shot right up. It shot right up. And a really interesting thing about that is almost immediately I was seeing rate changes from my lenders just going up 0.05%, 0.1%, nothing major. But then also on the variable side, it doesn't affect the prime rate at all in any way whatsoever. But what it does affect is lenders' tolerance for risk. And so what I saw, there was one lender that I've been doing a lot of business with that was prime minus 1%. Everybody else is kind of prime minus 0.9. They jumped back to prime minus 0.9. A lot of other people jump back to prime minus 0.85. So that election, we like to think that our market is separate and There's so much impact on what happens in Canada based on what's happening in the United States. Still, the expectation is that rates will continue to come down, particularly on the variable side, with some of the economic factors in the background. But there is a little bit of that kind of up and down as we go through some of these things that are affecting us internationally.
Right.
Absolutely. Yeah. So what's your best recommendation right now? Is it a 3-year fixed?
You know what? I'm getting a lot of people doing in between a 3-year fixed and a variable. There's actually a great 1-year fixed at 4.99 that I think is reasonable. 6 months ago, that's what the 3-year fixed was. So maybe give yourself a chance to get in, reset in the market a year from now, which I think will be significantly lower. And so even though that spread between the 4.19 to the 4.99 is 0.8%, let's think about what the next 2 years will look like. And all of a sudden, if you're locking into like a 3-year, then well, then you're golden, right? So it definitely depends on, tolerance for risk, what keeps you up at night. But yeah, it's the 10-year, the 3-year, and the 5-year variable are still strong options for people.
Well, as you know, we have a bit of an interesting mortgage through Manulife where 25% of it is variable. So we're like, come on, keep those
Yep.
rates, keep on coming down. That'd be perfect.
Well, and luckily you guys are locked into your discount. That's the only thing that matters. I think we can likely expect when we're talking next month in December, likely expect that we'll have heard of a rate drop by then as well. And I'm banking on 0.5% again.
Wow. So it's going to be a full percent.
Yeah, well, I think will these last 2 months be a full percent. Just remember what happened on the way up. We saw the same kind of thing, and we're seeing the opposite things happening in the market now. So I'm banking on a half point, but even if there's a quarter point, we're going to see several drops through 2025. I would imagine.
Right.
Natalie, you were going to say something, and I rudely interrupted you.
No, I just said right. But that's good news.
I mean, and that will help with people trying to get into the market. The fact that you have a choice now with the amount of listings that are out there, that's huge, right? A lot of people were just desperate and throwing money at it. So now it's like the stars are maybe aligning a little bit for buyers, which is nice to see. It's frustrating to watch someone lose out over and over and over again.
Yeah.
So
yeah, absolutely. All right, here we go. There's the bathroom trends for 2025. I like the light blue. Why not?
Yeah. Did you want to have a soak
in that tub, you might get cholera or something. I don't know. Okay, so these are trends that we're looking at for upcoming in 2025, and it's getting into winter, so people are starting to think about doing renos over the winter. So this is a pretty common thing. So they're incorporating more laundry into bathrooms, which is great if you have a small space. You can take advantage of it. You can open up space in other parts of the house. This is very common in Europe, and we are continuously at least 20 years behind with this kind of stuff. In Europe, you'll find washer and dryers in your kitchen all over the place. So it's starting to creep up. So yeah, that's a good example. This one as well is very interesting. It's plastering instead of using tile and grout, which for cleaning is huge. It completely waterproofs a room as well. And it is really good, again, for small spaces because you're not having all those grout lines sort of breaking up the room. So, yeah.
Yeah, and that's that European wet room that you see there.
Yes, and you see a lot of those here.
I'd like to do it at our house, but we can talk about that later.
We just moved in. Let's give it a minute.
I know. That's why I said later. Atypical vanity styles. So, incorporating more of furniture style into your vanity, it just gives it a visual interest. So
the Nordic spa at
home. Now, we've been to a Nordic spa. It's pretty amazing, I have to say. So they're incorporating a tub that, you could use as a cold plunge, and then you have an infrared sauna in there as well. So you're getting all the benefits year round.
You lost me at cold plunge, but okay.
And the last one is statement stone, which, this is stunning. I love this, but it's really making it like a piece of art on your wall in your shower, in your bathtub area. So yeah, I think it's some interesting things. It'll be interesting to see what happens in the next year. So that's all I got.
Sure. Awesome. That was great. So now let's do our monthly market recap. Here are your Calgary stats for the month of October. I can't believe it's November already. I say that every month, but it seems like the year is just whizzing by. So there you see, these are our overall stats for all segments. So we saw a 4.5% increase versus October of 23. Now, this was interesting. I think Natalie and I would both say this. Last fall, about at this time, we went into a bit of a blip because we had some listings last January that just were not selling. They weren't overpriced. The one sold for the exact same price 2 months later when it got relisted. So we went into a bit of a blip. So it'll be interesting to see, do we go through that again this year? So sales were basically flat to last year, but it's where the big story here is the new listings and the total inventory up 21.6% for new listings. Inventory up 55%. Last year in the same month, we were around 3,200. So that kind of gives you some perspective. And the months of supply. So again, months of supply, if no more inventory hits the market, how long would it take for the current amount of inventory to sell? And it was at 2.28. And that gives us a barometer of, are we in a buyer's market, seller's market, or somewhere in between? And at 2.28, we're still in a technical seller's market in the overall picture of things. We're going to break that down here. 32 days on market, which was up 21% from last year. So here's our detached picture. So prices up to 753.1. That's up 8% year over year, and you can see down less than 1% month over month. Again, Calgary Real Estate Board said price decreases are normal in fall, but just something to point out. Sales were actually up 10% year over year. New listings up 18%, inventory up 38% at the end of the month, and our supply at 2.05, although that's up 26%, that's still firmly in a seller's market, but there are just really pockets of inventory that just are not selling either. So it depends on a part of the city that you're really in. Semi-detached prices up 8%, down again, just 0.002. I put it in because I think it's important to see month over month trends, almost more than year over year, especially if you're thinking about making a move right now. Sales up 6% year over year because we have more inventory, because they were up 20% in terms of new listings, and the inventory ended up the month at 35% up year over year. Supply, again, 2.05, so still seller's market territory overall. Row townhouses, this was a bit of an interesting one to me. Prices actually down month over month, up 8% year over year. Sales were down 6%, although listings were up 25% year over year. So maybe we're seeing a bit of the apartment thing happening with row townhouses as well, as you see that inventory up 111% year over year. And supply, though, still at 2.22, but that is up 124%. So basically last fall, row townhouses were at a month. There were some months where it was less than a month of supply, so extreme sellers markets. And then with apartments, and this continues to be the story, I think, in Calgary real estate right now, is the massive increase in inventory. Although it pulled back slightly from last month, prices were up 11% year over year, but they were actually down almost a full point month over month. Sales 13% down, new listings up 27%, inventory up 67%, and supply actually, that's actually down from last month. So last month it was 3.23, I believe, and now we're just under 3. And that is up 91% year over year. And as we swing around our bedroom communities, very similar story. Airdrie, prices up 6% year over year for detached, 8% for semi, 11% for row townhouse, and 17% for apartments. New listings up 38%. Sales are actually up 24% year over year. And I think that's largely due to more new listings hitting the market. End of the month with 71% more inventory, and months of supply still at 2.37, which is, again, technically a seller's market, but that was up 38%. Cochrane, 6% up detached, 6% up semi, and row townhouse, 14% up on apartment condos. New listings up 24%, sales up 12% year over year. Inventory was up 31, and months of supply at 2.34. So it was interesting. I was chatting with somebody that called us off our YouTube channel the other day as we were actually standing in the airport in Toronto, and said, yeah, I've noticed that housing prices are quite high there, and they're thinking about moving from Vancouver. And it's all perspective, right? Like, are they higher than they were 5 years ago? Yes, but it's all relative, right? And they're not coming down very, very quickly, as you can see. If that's something you're waiting for, have Jaden run those numbers for you, because Jaden, those numbers typically don't work out if you're waiting for interest rates to come down, right?
No, we've been talking about that for a year, right? Like, people have been waiting on these interest rates to drop. In meantime, we're seeing 7% up. That might not mean much to you, but 7% up on a $500,000 property, there goes 35 grand, right?
Yeah. Purchasing power, absolutely. So Okotoks, 7% up on detached, 9 on semi, 13% on row townhouses. Apartments were up 9. 62% new listings, more new listings, 46% more new sales. Inventory ended the month at 103, which is up 56%. And then months of supply, it's under 2 in Okotoks. So that's still a very high demand market. We'll just take the stats off here. And people love living in Okotoks because there's just that small town feel with all the amenities that you need, plus you're 10 minutes to the south end of Calgary. So,
Yeah.
Natalie, what do you think? What are your thoughts after seeing the stats there this month?
Well, I mean, like we've
Been seeing things are crawling up for inventory, which I don't think is a bad thing. As we are seeing in the market ourselves, is that people are still overpricing properties. So if it's still sitting on the market, there's a reason. And if it's not the price, it's the price. So that's something to be considering as a seller at the end of the day. And it's just, like I said earlier, I think it's really good that there's more choice for buyers at this point in time. It's not the craziness. You can actually get a home inspection. You can do a condo doc review, all those things you couldn't do a year or two ago. So,
yeah, absolutely. Absolutely. And I think, we always say to people is you can do one of two things as a seller. You can improve the home or you can improve the price. So you have to make that decision before you list. What will you be able to do during the listing if you don't nail the price on that first weekend? And Jaden, we can actually give you more than like 2 days to get a mortgage approval.
Yeah, that'd be fantastic. I would love that. And it is funny how that's creeped up. I'm starting to see again that 10 business days has become the norm again, because it's not as competitive as a market as it used to be.
Yeah, absolutely. Absolutely. So to break it down, I think for buyers, like Natalie said, you've got a little bit more choice depending on the segment. And I just wanted to give just a real quick, this is what our chief economist for the Calgary Real Estate Board said. So sales gains for homes above 600K offset declines in the lower end of the market, resulting in sales that were similar to last year. The sales in October were 24% above long-term trends for the month, and the roughly 5,000 listings is really lower than our average of 6,000. So, that's kind of the overall picture there. And then if you're a seller, like we always say, you got to nail the price on the first weekend, ideally. And if you don't, you maybe have a bit of a buffer there, but you cannot price your home too low. You can price it too high. So there's our words of wisdom. Hope that helps. If you are watching on any of our social media channels, whether live or later, if you have questions about the market, reach out. And then next few weeks, we're back to our short little recaps, and then we'll see you again. I can't believe I'm going to say this in December for the November recap live all these places we do this. But have a great weekend, everybody, and we will see you on all these social media channels soon.
Bye, guys.
bye.